One of the greatest asset bubbles of all time happened in Japan, and when that bubble popped, well, let's talk about it. Holy banana bread, let's do this. One of those stories we are always hearing about is Japan and that massive bubble burst in 1992. On December 29th, 1989, at the peak of the bubble, the Nikkei stock average was listed at 38,957.44. It has never seen that value again. In fact, when 2021 ended, the Nikkei average was only 28,791.71. Before we figure out if I am pronouncing Nikkei right, tell me in the comments if you have heard this tale before. I am always grateful when you drop in on the home of free financial content on YouTube. While you are here, please subscribe as you don't want to miss a single moment, and a huge thank you for that click. This all began way back in the 1980s when Japan had a pretty booming economy for the time. Their average growth was around 4% per year, so that's not too bad for the 80s. In addition to that growth, they also had record low unemployment and credit was readily available. Monetarily, the Japanese yen was very weak, and at the same time, interest rates were very low. With so much available easing money, a lot of it got pumped into the stock market, and as a result, they were growing fast. We were witnessing the birth of a bubble. In 1985, good old America championed a deal called the Plaza Accord. This deal was designed to help America resolve some of their trade imbalances with other G5 nations. Unfortunately, this deal was not so good for Japan as it began to inflate the value of the yen. The Bank of Japan, in response, cut their interest rates because they were trying to devalue that rising yen. Holy banana bread, that bubble was about to go hypersonic. The lower rates led to more money being borrowed for investing, and the stock market was rising faster and faster. Real estate also was taking off as land and house prices rose more than 160% by 1990. Stock prices during that time had also more than doubled. Japan was seeing runaway prices, and the Bank of Japan needed to get it under control. I think at this point they kind of realized they shouldn't have let it get so out of control. They of course hiked interest rates quite sharply as their tool to hopefully tame the runaway prices. The price hikes of course worked as stocks began to fall, and by 1992 the bubble had officially gone pop, as stocks had fallen just over 50%. Real estate fell, but much slower, thus rate hikes continued, which was really not very good for the market at all. This overall crash was absolutely devastating for Japan's economy, and it led to a bankruptcy rate increase more than 60%. Wages also began falling sharply, even though, funny enough, unemployment still stayed low. This burst had set Japan up for a period of extended stagnation. They called it the lost decade, as stagnation gripped Japan from 1991 all the way up until 2001. Asset prices continued to fall, and the GDP came to a slow crawl. It was a brutal 10 years, and it did not really get much better, as the next 10 years was much of the same. By 2014, we finally began to see the trend reverse, and there has been some growth in the Nikkei as it has made up a lot of ground. By the time 2020 rolled around, the Nikkei had grown past 20,000, and then the pandemic pushed it over 30,000, well, briefly. It has fallen a wee bit since then, and it will be interesting to see if the pandemic supports have resulted in another drop, though nothing as bad as that bubble that technically Japan never truly recovered from. When people talk about this big crash, there's one thing that they are always forgetting. This is an inflated bubble that should never have happened. Another way to view all of this is if you think about it, the height of the bubble was way overinflated. And if you ignore that data and just transition your growth without the bubble as though it didn't happen, you will find that Japan's current economy is, well, it's actually on track compared to where it would be if the bubble never happened. A lot of investors sometimes get caught up in that bubble and think, oh, it never recovered, I should stay out of the Japanese market. Well, that could be a mistake. There are definitely opportunities there. The big takeaway from this bubble is that the Bank of Japan should have acted sooner and should never have allowed the perfect storm to develop in the first place. I think when we look at rate hikes today and the actions of the Fed or even the Bank of Canada, it is not hard to see that in balancing our interest rates, they have an eye on what can happen if they really majorly get it wrong. As much as we would all like the good times to go on forever, this bubble does teach us what exactly happens when we try to do just that. Sometimes too much of a good thing can lead to a bubble burst. The fun does not have to end here. Check out my video on buying the dip that I will link on the left. Otherwise, check out the video on the right that YouTube thinks you will like. Your click, of course, will decide who is right, and I will see you in the next video.